everyone. I am C. Aman Rajput, moderator of this webinar. We are delighted to welcome you all in this webinar organized by the Committee on Commercial Law, Economic Advisory, and NPO Cooperative of ICAI, which is focused to encourage chartered accountants to shape strategy and policy that unlocks economic, financial, and social value by combining analytical fortnight with commercial acumen. The core area of this committee is to serve multifunctional tasks of analysis, spreading knowledge, providing inputs to regulation and policy formulation to develop and publish technical guidance and background materials. Also, this committee works on creating awareness for professional opportunities for chartered accountants in commercial law, economic advisory, and NPO cooperatives. It's my pleasure to moderate the webinar on key developments under the new labor codes and its impact on business, hoping it will be useful for all our members. Now, let me introduce our today's speaker for the session, CA Ankur Agarwal sir. Sir is a seasoned professional with over 14 years of experience in advising clients on direct tax, labor laws, including social security, global mobility, immigration, and exchange control regulations. He is currently a director at Grant Thornton Bharat in Global People Solution, Bengaluru, and has extensively advised multinational companies and startups on co- uh, compensation structuring, secondments, permanent establishment risk, employment contracts, and labor law compliance. In his earlier roles with leading tax consulting firms, he supported multinational clients on Indian tax and regulatory compliances, tax litigation, and research on new labor codes. He is a regular author for reputed publications and speaker at professional forums. Also, he is a commerce graduate, a chartered accountant, and hold a diploma in information system audit (ISA). He is also a company secretary and a law graduate. We welcome you, sir.
Thanks a lot, Amanji, for the introduction. And thank you, CCLEANC, for this wonderful Know Your Law series. Awareness on labor codes is the need of the hour, and possibly every organization is getting impacted because of new labor codes. So we will be discussing about the business opportunities for professionals, as well as the kind of impact new labor codes is bringing on industry. So a warm welcome to all of you and a good evening to all the participants. Let me just present my screen. So before we start the session, some of the statutory disclaimers. As chartered accountants, we can't live without statutory disclaimers. Whatever views I'll present is more of a personal view. It may not necessarily be my employer's view. And whatever discussion we are having is for educational purposes only. So a brief legislative, framework of what developments have happened so far, because I understand all of us may not be up to mark, and we'll be discussing some of the very basics from where the journey started and where we are today. And during this journey, please feel free to post your questions. We have time. We will try to address all possible questions during this session itself. And possibly if we have some time left, we can take some more questions towards the end. So in India, there is a concurrent state of affairs where center and state, both the governments can make rules on labor laws. So what government has done, 29 different central labor laws have been subsumed under 4 labor codes. And these codes were passed by the Indian Parliament in 2019 and 2020, but the laws were not made effective. These laws have been made effective with effect from 21st of November 25. So very important point, from 21st of November 25, 4 labor codes which subsumes 29 different labor codes are effective, and a lot of changes are live. You have to make a lot of changes in accordance with these labor codes. Government is working day in, day out. There is a lot of efforts which is going in the background to have a smooth implementation. A lot of FAQs have been released on 30th December. the FAQ on different code, generic FAQ on wages. Even Institute of Chartered Accountants of India have released a guidance note or a FAQ for supporting the accounting treatment and disclosures for additional liabilities in terms of leave encashment and gratuity that would arise. So we'll discuss one by one all of them, and let's hope for the best. So this is a brief, overview of the status so far in the country. Uh, uh, as India is 36 states and union territories are there in India. Out of 36 states and union territories, 32 states and union territories have all the rules which have been published. And out of that, some of the states have already notified the state rules. For example, Karnataka Code on Wages rules and IR Code rules are already notified, which means that some of the changes are immediately to be made, at least for organizations which are based out of Karnataka. While there are some of the states, West Bengal is one of the states where none of the rules have come. There are some other states where all the rules have not come. And we understand these states will also bring up with their rules in due course of time. There are constitutional provisions that if these states do not bring the rules, it will not be a showstopper and central rules will prevail in such cases. So labor law will get implemented in due course of time. The full implementation will happen. Laws are already live, but full implementation will happen even though some of the states do not support this endeavor of central government. Now, as I stated, government is working day in, day out. When these labor codes were notified on 21st of November, Mrs. Vandana Girmani, who is the labor secretary, she came in media. There was an interview which was given to Economic Times, and she very candidly and categorically stated that labor codes are live, but the entire or effective implementation will happen on or before 1st of April. So what happens, each state has to come up with their rules. Most of the rules are there in the draft mode. There is a process of public consultation. Once that happens, then the rules get notified. So all of that will take, 2 to 3 months of time. And that is what ma'am stated in that interview. So in accordance with that, the central government actually came up with the draft rules under the 4 labor codes on 30th December. And now that public consultation window has started. Once that is over, it is expected that maybe by end of February or mid of March, the central rules will get notified. Similar process will be followed by the respective state governments, and the rules which are in the draft mode will get notified. Now let's get into a granular discussion where we'll see what kind of laws have been subsumed under these 4 codes. So the 4 codes have different themes altogether. One of the theme is timely payment of wages, bonus, that is subsumed under code on wages. There are 4 laws which have been subsumed. There is another code which is in relation to industrial disputes where IR code has been formed by subsuming 3 different laws. The third one is very critical, from practice perspective. I'll just put a laser pointer also. So code on social security is very important because in any organization, if any employee is coming to the employer that what is the impact on my take home salary, or if the company is worried what kind of financial impact cost to company increase will happen because of the labor codes, most of the answers you will get from code on social security, because you will see some of the line items in green, the ESI, EF Act, and gratuity. All of that is subsumed under code on social security, and these are the laws where on a monthly basis, month-on-month basis, some sort of contributions happen through payroll. So it directly impacts. It's very sensitive from employee take-home salary perspective. And the last one, occupational safety, health and working conditions code. Something very interesting for HR professionals, because there are a lot of laws which were in relation to occupational safety, health and working conditions. All of them is getting subsumed under this code, and we will see a lot of provisions, right, which were earlier applicable only to a factory kind of setup or not very prevalent in IT ITS. All of them will also get equally applicable for IT ITS sector as well. A couple of points here from my side. When we see this list, right, only 29 different central labor laws have been subsumed. That does not mean all central labor laws have been subsumed. There are many other labor laws at central level which will continue to exist independently. For example, POSH Act you will not find in this slide. So POSH Act is not subsumed under these central labor codes. Similarly, the state level labor laws still continues to exist. For example, the Shops and Establishment Act continues to exist. There is a Professional Tax Act in various states that continues to exist. If Labor Welfare Fund Act could be there in multiple states, all of them will continue. So we will live in an era where state laws will exist and central courts will also come into picture, and there will be some overlapping provisions as well. Today, under Shops and Establishment Act, we would see that there are provisions in relation to leave, working hours, and so on, which comes from Shops and Establishment Act. Similar provisions will come from Occupational Safety, Health and Working Conditions Code. So going forward, there is a need of harmonious construction between the central and state laws, and that to be read with state rules of central courts. And once that harmonious construction happens, then your policies, processes around HR, if you have HR handbook or a employee handbook, that needs to be updated to align with the new requirements of the law. Yeah, any questions so far, Amanji, you have received? I can take it up.
No, sir, currently no
Perfect.
questions.
Perfect. So we will get into a very important discussion now on code on wages. As I stated, code on wages subsumes 4 laws: Equal Remuneration Act, Minimum Wages Act, Payment of Bonus Act, and Payment of Wages Act. So all of them are kind of related to timely payment of wages or timely payment of bonus, right? So one discussion today, if you have to take one single concept with you, the most important discussion, then that is the concept of the new definition of wage. And there lies a lot of professional opportunities for all the practitioners and the professionals. So these 29 different labor laws, right? Each one had a definition of wage, and once the wage was calculated under each law, then the entitlements were provided to employees based on that wage calculation. But then that was a matter of always a litigation. Each act had different interpretation, and the matters used to go to court. So one good thing what has happened under these 4 codes is that now there is a single unified definition of wages. And once the wage you calculate, right, whatever entitlements are there under these 29 laws, it can be PF, ESI, gratuity, maternity benefits, leave encashment, overtime, whatever you name, right, all of them will be calculated on this single wage. And once you calculate the wage, then you don't have to go back again to the base calculations. So we'll see how the wage is being calculated, a very important concept for today's discussion, because all our discussions will ultimately tie back to this discussion. So wage has been uniformly defined under the 4 codes, and wage definition has 2 parts. What I have done, one part purple box and the blue box. So purple box is a all-inclusive kind of definition, which means that wage basically includes all remuneration, whatever you are paying to your employee by way of salaries, allowances, or otherwise, expressed or capable of being so expressed in terms of money. So wage includes anything and everything you pay to your employees. And it's an inclusive definition. It states that it also includes basic pay, dearness allowance, and retaining allowance. So which means that other components are included. For a clarificatory purpose, we are confirming that basic pay, DA, and retaining allowance is also being added. This does not mean that only basic pay, DA, and retaining allowance will be taken. There is some of the HR folks are taking an interpretation that wage means basic pay, DA, and retaining allowance. It's an inclusive definition under law, which is always clarificatory in nature. So you have to take anything and everything which is being paid to employees. And then you have to see what are the specified exclusions under the Act. So total of 11 exclusions have been provided under the Act. If any of the compensation component consists of these 11 exclusions, then they will have to be knocked off from the total what you calculate in purple. So what are the 11 exclusions? We'll discuss that. First and foremost, first exclusion is bonus payable under any law, but not forming part of remuneration. Now, they have not stated bonus payable under statutory bonus, but a constructive reading comes out of this language is that bonus payable under any law should mean statutory bonus, which is being payable. Then value of housing, accommodation, and utilities. Then employer contribution to PF pension. The next one is conveyance allowance or value of traveling concession. When I say value of traveling concession, I can extend it to leave travel allowance, LTA, what we call under the compensation structure. So any conveyance allowance or LTA or LTC, leave travel concession, which is paid to employees. Coming next, sum paid to defray special expenses due to nature of work. Now, what is a sum paid to defray special expense is not defined anywhere in the existing act, neither it was defined in the earlier acts, because some of these language have been taken from the earlier acts. So the language is defray special expenses due to nature of work. So this is one area where, at least to my understanding, or organizations can take some calls, what some expenses which are in relation to their specific nature of business, they can pay, and that will get excluded from the definition of wage. For example, some organization where uniform is mandatory, then you pay a uniform allowance to cover expenses for those uniform. Ideally, that can come under defray special expenses. Another important item, you will find this in all the compensation structures typically in India, house rent allowance. So any HRA which is paid to employees is a excluded component. The next item is overtime or commission which you pay to your employees. And the last two are terminal benefits, the line items in red. These are the benefits which may be paid to employee when they get separated from the organization. So it's a gratuity payable on termination or the retrenchment compensation if they get on separation from the organization. So there is a conditional rule which has been applied for wage exclusion. The conditional rule states that the specified exclusions, these 9 specified exclusions, the 9 line items in red, this cannot exceed 50%. It has been capped at 50%. So now again, a very, very important concept here. Generally, people are loosely quoting it, and they are stating that my inclusions will be capped at 50%. The inclusions will not be capped at 50%. Exclusions will be capped at 50%. So which means that if the purple is 100 and the blue box is just 20, total of all the exclusions is 20, then my wage technically can become 80 in such scenario. Accordingly, if the blue box has a total of 60, right, out of 100, then there is a capping of 50 which will be applicable. So 100 minus 50, 50 will become my wage. So wage can be more than 50, more than 50. Inclusion can be much more than 50%. That's a very important concept to be considered. And then once you calculate the wage, there is something called as remuneration in kind. Any benefits you are giving to your employee, that has to be added up to 15% of total wages. Now there is an ambiguity here. What is the remuneration in kind is not defined. Like Income Tax Act has a valuation rule. Rule 3 is there for valuing the benefits in kind or perquisites. No such valuation rule exists here. So this is something where it will evolve over the period of time. Some further FAQs may come from Labor Ministry, which can clarify how remuneration in kind will be taken care of. So let's understand this concept with a couple of examples. I have taken a typical ITS kind of example where my total remuneration in a month is 100,000 and my basic salary is 40% of total remuneration. HRA is 50% of basic salary, which comes to 20,000 in this example. Leave travel allowance is 16,000 and special allowance is 24,000. So there's a total of 100,000 in this example. So what should be the wage in this scenario? A, B, C, D. Just I'm giving some time to you to think about it. Wage in this situation would be B, 64,000. And if you have taught A as wage, then that's incorrect, because the capping rule will not apply here. I have two inclusions, basic salary and special allowance, because special allowance is not specifically excluded under the wage definition. So 40,000 and 24,000 will be added. So 64,000 is the right answer. My exclusions are just 36,000, 20,000 and 16,000. So accordingly, the 50% rule will not get triggered in this case. Accordingly, 100 minus 36 will be my answer. So B will be the answer here. Now let's understand what is the impact because of this, basic salary 40,000 becoming wage of 64,000. For example, you have to do a gratuity calculation. So prior to 21st of November 25, the gratuity formula was 15 by 26 into basic salary into number of completed years of service, right? Now, in the new regime, in the new labor codes, the calculation will be 64,000 into 15 by 26 into number of completed years of service. So the base is changing from 40,000 to 64,000, which means that there will be a jump of more than 50% in terms of gratuity payout, right? So this kind of significant impact can happen in organizations, and based on our interaction with industry, the practical side of it, we are seeing that because of special allowances, the wages are in the range of 70-80% for a lot of organizations. So considering this fact, there is a need that organizations may consider a wage restructuring exercise in their in their companies or organizations. A compensation restructuring can be taken care of. So in this case, my minimum wage could have been 50,000, 40,000, and if special allowance was 10,000, 50,000 could have been the wage, because wage cannot go below 50%. It has to be a minimum of 50%. But additionally, this 14,000, which is additionally appearing in special allowance, that is what is resulting into increased wage. So if some sort of optimization happens with the wage definition, if the special allowances, a part of it becomes excluded components, then it can be optimized and cost impact can be managed to a larger extent. Coming to the second example, there are two exclusions in this example: HRA of 28,000, conveyance allowance of 28,000. So 56,000 is my wage exclusion, and my inclusion is 44,000 and 4,000, 44,000. So what should be the wage in this scenario? 50,000, 44,000, or any other number? The correct answer here is B, 50,000. So 28 plus 28, 56,000 is my wage exclusion. But if I compare, 100,000 with 56,000, that is more than 50% of remuneration. So I have to cap my exclusions at 50%. So my exclusions will become 50%. That is 50,000. And accordingly, 100,000 minus 50,000, that is B, 50,000 will be my wage. So in this example, again, there is a jump from 40,000 to 50,000 in terms of wage calculation. Earlier wage for gratuity was 40,000. Now it will be 50,000. But this is a bare minimal increase which will happen because of the new law coming into picture. Having said that, in the previous example, the wage was kind of becoming 1.5 times, right? So that kind of impact can be, somehow to some extent controlled if a compensation structuring is taken care by the organizations. Now coming to a very, very important part, since last 5 years, from the time this wage definition had come, the laws were passed by Indian Parliament. We were getting these questions from clients that what will be the treatment of one-time payments, what happens to the employees, such as joining bonus or performance bonus. Then ESOPs, if there is a ESOP payment which happens to employees, because technically what we discussed, the purple box of my wage definition, anything and everything which was payable to employee was getting covered as wage, right? But then there was an alternate view that if one-time payments are added in wage calculation, then that could have given very skewed or very incorrect results for social security contributions. So accordingly, now ministry has provided a clarification through a FAQ on 30 December, where they have very categorically stated that performance-based incentives, ESOPs, any reimbursement-based payments shall not form part of wages. Even they have clarified that leave encashment, what will be paid to employees, that will not form part of any allowance and ideally will not form part of wages. So it's a very, very welcome move because these were the open questions from industry which we were getting since couple of last years.
So may we take the
I will,
questions?
yes, I'll take couple of questions before
Okay.
we go to the wage code. So
So
in
first,
terms of, there are a couple of questions, I'll just repeat it for the benefit of audience. If there is a conflict between state and central laws, what is the guidance for the organizations to follow? So both the laws will coexist and a harmonious construction has to be done. For example, in the state of Karnataka, leave carry forward provisions are up to 45 days as per Shops and Establishment Act, and as per the labor codes, leave carry forward provisions are up to 30 days. So you can have a harmonious construction up to 30 days meets both the requirement. You can have a leave carry forward of up to 30 days. So to answer you, both will coexist and the conflict has to be resolved to the best of the, like best benefit what can be given to the employee. Then car provided to KMP shall form part of total remuneration. Very, very important and relevant question. So car, there are different views. One is that benefit in kind, we discussed, right? Remuneration in kind, it can come there. But the valuation rules are not there. So what value you will take for that car, whether the WDV value will be taken or the value of petrol or the maintenance cost, what you incur on monthly basis, that will be taken. So some clarity around that is still awaited. So is the variable pay shall be included or not? It it depend on performance, but amount is written in salary letter. Right. So I understand what you are suggesting. The language, what you are referring, written in salary letter, that is more for the statutory bonus. So the language for statutory bonus was the stat bonus is paid and it should be not be forming part of your contract. But one-time performance bonus, if it is being paid, even though it is written in offer letters, then ideally, as per the FAQ which has been released, should not form part of wages. Car lease, there is another question we discussed. You rightly discussed in many organizations, compensation structure is done. Is it legally permissible under Section 124 of Code on Social Security? Right. So very important question. I'll just address this question. Section 124 of Code on Social Security, right? It states that uh, the employer cannot reduce the wages just for the sake of reduction of employer's contribution towards PF and ESI. So first and foremost, 124 is in relation to only PF and ESI. Other laws are not applicable. Gratuity and all is not covered there. Um, Now coming to PF and ESI, a similar section is there under the current PF Act. Section 12 of PF Act has the same language. The same section has been now made 124 of Code on Social Security. We will discuss in today's session that PF contributions technically will not reduce under the new labor codes. Because PF contributions will not reduce, Section 124 will not get triggered. And restructuring of compensation structure is very much permitted under the new labor codes as well. And let's understand Section 12, which is the equivalent of Section 124 of Code on Social Security, was always there under the PF Act since ages. And all the organizations have done, time to time compensation restructuring. So no, never that was questioned that from Section 12 of PF Act there is a restriction. You can't do a compensation restructuring. Obviously, you should not reduce the PF contributions by doing a comp restructuring till the time you are maintaining a basic salary as static percentage or amount, absolute value. It should not impact, and 124 will not come into picture. There are webinars where representatives from Labor Ministry had come, and these questions were asked to them that whether comp structuring is possible or not, and they have stated in affirmative, yes, it is very much possible. So we can go ahead. Coming to key provisions of code on wages. Now, code on wages is very important from payroll perspective. So any of you, if you are dealing with the payroll, right, a lot of impact will happen on the payroll processes and policies and so on. So first and foremost, there is a timeline for payment of wages which has been prescribed. You have to pay the wages by 7th of subsequent month to all the employees. Now, this is not a problem when employees are continuing with you on a regular basis, the payments are happening. But any employee who joins after the cutoff date, which is the payroll cutoff date. So let's assume for the month of January, 20 January was the payroll cutoff date in an organization. An employee joins on 22nd of January. Then typically most of the organizations whom we interact, we understand the money will be paid with February payroll, and they will get somewhere their salary for these 8 days in the month of January by 28th of February, right? So that is now not permitted. You have to pay the employees by 7th of subsequent month, or by, on or before 7th of subsequent month, which means that once you run a payroll based on the cutoff data, you may have to run a supplementary payroll to pay to the employees who join in the blackout period, which starts after the cutoff date. So that is a very important change from payroll perspective. All the payroll vendors, you need to initiate discussion with the payroll vendors to ensure that this is taken care of. And through supplementary payroll, this payment can happen. From a practical side, some of the clients do suggest that we will push the hiring by a week's time. So let's say a hiring was supposed to happen on 26th or 27th of January. We will just push it by a couple of days, and we'll do the hiring on 1st of February, so that the need of supplementary payroll may not be required. Another important, concept which is evolving is around minimum wages. So currently, how minimum wages works is that every state government has prerogative. They define what is a scheduled employment. They issue a notification of scheduled employment, and as per that notification, they will prescribe that these are the, let's say, 10 or 20 scheduled employment. These are the skill set, and these are the specified rates of minimum wages that has to be provided. So Government of India has, very categorically stated that now the concept of scheduled employment altogether will be abolished. So which means that anyone and everyone in the country is technically covered under minimum wages. So I was reading somewhere that only 30 to 40% of employments were covered under scheduled employment. But with this change, anyone and everyone in the country who is employed kind of gets covered under the scheduled employment, even though minimum wages coverage was not there earlier. Now minimum wages coverage will be applicable for them. So that is the protection they will be getting because of this code on wages coming into effect. Another important, aspect, government will be issuing something called as national floor wage, which means that, let's say government of India says that for this particular region, 20,000 is national floor wage. Then the respective state government cannot have a minimum wage less than the floor wage. The state government can have minimum wage of 20,000 or more than 20,000. So it will be at floor wage or more than floor wage. So a new concept which is coming to protect the interest of workers and the employees. Last one is very critical, very important, and a very big administrative challenge for industry. Full and final settlement has to happen within 2 working days of employee leaving the organization. So any employee who leaves the organization, you need to ensure that at least the wages are paid within 2 working days of the last working day. So this is a very, administrative and practical challenge. A lot of industry has a concern on this, because within 2 days getting the calculations done, money paid, asset recovery, because the employees will have asset in this world after COVID, people work virtually. So getting the assets on time, all of that has to be done within these 2 working days. So it's a practical challenge, but there are solutions around that. The entire process of, settlement can be preponed. You can start the process once the employee puts down the paper, the workings are ready, and accordingly this can be achieved. So this is one area where again all the organizations have to keep a watch. At least in the state of Karnataka, the code on wages is already notified. So organizations which have employees based out of Karnataka, it's very much live from 21st of November, and you need to ensure that this is taken care of by in discussion with your payroll vendors. And I would like to state that this is not a new provision. For termination of employment cases, this kind of provision always existed. But now this provision has been extended to voluntary resignation cases as well. Coming to the last 2 points here, we'll discuss about normal working day and overtime in one of the other code. Unauthorized deductions or cap on employee deduction. So code on wages, prescribes for a list of authorized deductions which can be made from employee's salary. And some of the, the list includes some of the components such as taxes, income tax, PF deduction, all of that comes under the authorized deductions. And what the law states that only up to 50% of deduction can happen from salary, which is being paid. More than 50% deduction you can't do from an employee, including PF, taxes, and everything. So any organization which has policies such as loans and advances, where you pay a advance or loan to your employee and recover it, you have to relook into those policies. How you are recovering the money. You cannot recover the entire sum in 1 month now, considering this restriction which has come. The recovery has to happen in a staggered manner, so that you do recovery also, but 50% limit what has been prescribed remains constant. Another important, concept in terms of contractual employees. So a lot of changes labor codes have brought. Different codes have different provisions in relation to contractual employees and this contractual arrangement. We will discuss all of them as and when the right code we reach. But one change, what is coming, which was not there earlier, is that the payment to contractor has to happen by 7th of next month, at least for the salary part or the wages part, which has to be paid to the contractual employees. So this is a area where lot of practical challenges will come in terms. So today the current practice would be a third party vendor or a contractor is providing you services. Then once the services are over, an invoice will be raised. And once the invoice is raised, then the company will enjoy their credit period of 1 month or 2 months of time, and then the payment will be released to contractor. Now the new law states that you availed services of a contractor in January. By 7th of February, on or before 7th of February, you should ensure that at least the wages or salary part is paid to the contractor so that they can discharge their liability on a timely basis. Other aspects, their markups, profits, and all can be paid at a later date. So this is one area where you have to be, careful. Some ring fencing in the third party contracts needs to happen. You need to ensure that this payment is being done, even though invoice is not coming to you. There are other practical, solutions which are emerging here. Some sort of advance can be paid, and law will evolve in due course of time. But one thing is very clear, that at least the contractor should get amount equivalent to the salary payment to the employees. Yeah, coming to the next code, that is code on social security. As I stated, earlier, this is a very important code from employee sensitivity perspective, because this is a code where directly employees take home salary gets impacted. And that's why a very clear understanding of this code becomes the need of the hour. Also, you would have seen a lot of media coverage around these topics, because these are the topics which interest people. Your take-home salary will get impacted. So we'll discuss one by one what is the impact on all these aspects. First and foremost, on PF, right? There is a genuine concern in industry that if PF I have to pay on wages, right? Wages may become 1.5 times or 2 times, then there can be a very significant reduction in employees' take-home salary. So to clarify that, PF, it is expected that anyone who is having basic salary more than INR 15,000, for them, there will be no impact. In the current regime, under the PF Act, any employee who has wages up to INR 15,000 are covered employees. Beyond 15,000, if you have wages or basic salary, you're not a covered employee at all. But the contributions are more of a voluntary uh, contribution you make. And the contribution which is statutorily required is 15,000, which is the wage ceiling, into 12%, that is 1,800 rupees per month. So any organization which pays PF on basic salary, they are anyways paying more than the statutory ceiling of 15,000, right? So the same logic continues. It will continue. The PF, you can still go ahead and pay on basic salary. You don't have to, pay on wages. Or if you are restricting it at 1,800 rupees, you can continue to restrict the PF contribution on 1,800 rupees till the time statutory ceiling of 15,000 remains. So a couple of days back, there is a judgment which has come where courts have asked central government to revisit the statutory ceiling limit also. If the statutory ceiling increases, then that 15,000 may increase to 20,000 or 25,000. But the concept remains same, that PF contributions beyond, wages of statutory ceiling of 15,000 or whatever will be prescribed will not change. Now, this view has already been affirmed or clarified by Labor Ministry. So there was this clarification which came from Labor Ministry, and they have clearly stated that when you are contributing over and above statutory limit of 15,000, then it's more of a voluntary contribution, and there is no need to contribute on wages. So your take-home salary, ideally, in the new labor codes, will not change if you have basic salary more than 15,000. Coming to the other important part, ESI coverage. This is one area in terms of ESI coverage. I feel there's a lot of potential that industry can, go wrong in terms of coverage of employees. So today, the mindset and the law which has been there since ages, the coverage is based on a gross salary of 21,000 rupees, right? Now the coverage will be on wages of 21,000 rupees, which means that if wage is at 50%, technically up to a gross salary of 42,000, coverage of employees can come. And if I, kind of do some maths there, it kind of comes to a CTC of INR 5 lakhs. So up to INR 5 lakhs, if employees are there, technically the organization should ensure or check whether they will fall under ESI coverage or not based on the new wage definition. Uh, if the wage is more than 21,000, then no ESI coverage will come for them. But if wage comes less than, for example, if 40,000 is your gross salary, the wage can become 20,000, right? If wages are at 50%. So technically a 40,000 or a 42,000 of gross salary can also get covered under ESI coverage. Now there is a lot of confusion when this will be live or when this will be applicable in terms of coverage. So I'll just show you something. These are some of the communication which have come from ESI department. So on 11th of December, ESI department issued a communication which clearly stated, whatever I mentioned, that because the wage is coming, the coverage will increase, and you need to ensure that exempted employees is covered in a covered establishment is likely to be brought back under the coverage of ESI. So this was issued, but again, in couple of days, on 18th of December, there was another communication which was issued, and the ESI department stated that um, the compliance will be done in accordance with notified rules and regulations. As of now, you don't rely on the communication which was issued on 11th of December. Then government has issued another, FAQ on labor codes on 30th December, which is a communication from Labor Ministry, which again states that the coverage will increase based on the wages definition. So there is a, some confusion around that. But having said that, my interpretation here is that because ESI is a specific authority for ESI coverage, and this 18th communication has come, which means that we should wait for further communication or notification from ESI department for making changes to the ESI coverage. But this is one area where you have to very closely monitor it before your compliance due dates. You need to ensure that any communication which has come from ESI department should not be missed, because government is super active. The respective departments are very active in this arena, and there may be any communication which comes and they can tell that from this month you increase the coverage of employees, and additional employees should get covered under the ESI coverage. I'll just take some of the questions here. If the exclusions does not exceed 50% of total remuneration, whether basic DA retaining allowance be less than 40%, as nothing more will be added. See, exclusions, if it does not exceed 50%, whatever is left out will become your inclusion. So my example, uh, uh, so 64,000 was coming because inclusions were just 36,000. Then excess leave accumulated 31st December. Leave encashment we'll discuss in one of the code. EPF contribution continue to be delayed by client. Will there be any implication from EPF office as client make the payment altogether of 12 months? Okay, this is interesting question. So EPF non-compliance, anyways, you are having that there's nothing related to labor codes here. So if you do a delayed EPF payment, then interest and damages will come into picture. Coming to gratuity, you would have seen a lot of articles that gratuity is applicable after 1 year of continuous service, right? That is not correct. For regular employees who are your permanent employees, and the offer letters have been issued in such a way that the offer letter very clearly states that you will continue in the organization till the age of superannuation. So in such cases, they are not fixed term employees, they are regular employees, and the gratuity eligibility will be there after 5 years of continuous service. And when I say 5 years of continuous service, it means that 4 years, 190 days or 240 days, based on the number of working days organization has per week. Now, if you hire someone called as fixed term employee, so what is a fixed term employee? Any regular employee you are hiring, but for a fixed duration of 1 year or more, then that person will be called as fixed term employee. So we have seen this practice that for specific projects, a lot of companies hire people. They are regular employees, they get salary through payroll, but they are hired for a period of 18 months or 12 months or 20 months, right? And once the project is over, they kind of that contract gets over. So these set of employees will be called as fixed term employees. And once someone gets classified as fixed term employee, then gratuity will be paid after 1 year of continuous service. So in general, gratuity is payable after 5 years of continuous service remains for regular employees. For a specified set of employees who will be classified as fixed term employees, for them, the gratuity entitlement arises after 1 year of continuous service. So let me take two examples here. You hire someone for 18 months, right? And as a regular employee, but for 18 months period only. Now that person works in the organization for 13 months. Then that person will become fixed term employee, and when he's leaving, he will get a prorated gratuity amount. But if the same person who is hired for 18 months and that person does not provide continuous service of 12 months, so person leaves in the 8th month or 9th month, then he or she will not be entitled for gratuity on a prorated basis. Third point, increased quantum of gratuity, very, very important point from financial side of it. The biggest financial hit of new labor codes is this part. There is a increased quantum of gratuity that is going to happen. So a general wage analysis kind of states that a lot of organizations, the wages have reached has become 1.5 or 2 times of basic salary. The wage under the new labor code is almost 1.5 to 2 times of basic salary. So now the gratuity has to be calculated on new wages, right? And when you calculate on new wages, the quantum of gratuity also kind of multiplies in the same fashion. And this becomes very critical because all the impact will be taken care of at the year end when you will do actuarial valuation. Whatever additional provisionings will get created for that, it will go into your PL statements, and the profitability of the organization will go down. So biggest financial impact here. There is a guidance which ICAI has issued on a very timely basis in terms of if the increased provisioning happens, what kind of treatment you will do from accounting side of it. Below the line item, it will be treated; above the line item, it will be treated as past period, or how it will be treated, and what kind of disclosures has to be made in the financials. So I would recommend all of you to read that document as well. It's a very good document. One area, where a bit of ambiguity still arises is that whether this levy is retrospective or prospective. So, although the law is very clear, the Code on Social Security is very clear. It says that last drawn wage has to be considered for gratuity calculation. The FAQ, which has been released by Ministry as on 30th December, right? That states that there is a question in that FAQ whether it will be retrospective or prospective. So it says that gratuity will be calculated with effect from 21st of November. So that kind of does not answer the question which was there in the FAQ. So there can be two views. One view is that obviously I will do a new way calculation of gratuity on new wages from 21st November. So any of your employee who is leaving after 21st November and eligible for gratuity, they will get gratuity on the new wages. To me, that is the right interpretation, and that is aligned with the language which is coming in the labor codes. And CA Institute has also kind of suggested that kind of treatment. But having said that, the other view could be that FAQ says that gratuity is applicable from 21st November. So which means period prior to 21st November, I will consider old basic salary, and after 21st November, I'll be considering the new wage definition. So that is also one of the view that the law will be applicable prospectively. It will not be applicable retrospectively. But I I believe that the law is very much applicable retrospectively because that's how the law has been defined. And last drawn wages is mentioned. So last drawn wage will be your new wage and number of completed years of service. Once you multiply, then it will have a retrospective impact on your provisioning. Another important aspect here. Uh, Today, there is no period of limitation under the PF Act. So that's a very big challenge we have seen from a practice side of it. The employers can get a notice which is of a very old period. Unlike Income Tax Act, the limitation period and all is not prescribed. So government has now introduced a 5-year period of limitation for PF matters, which is a very, very welcome move from department side. And this will really help. A very business friendly kind of provision has been introduced, which will help the employers in better compliances. Then you must be aware of that today also there is a provision of voluntary PF coverage. So, any organization which has less than 20 employees, you can voluntarily opt for PF coverage. But the challenge is that you can opt for PF coverage, you cannot come out of PF coverage. So the law has now provided enabling provisions that the organizations can actually come out of PF coverage also. Obviously, there are some conditions which are mentioned. So there has to be agreement with majority of employees. The PF commissioner should be satisfied that there is a need of opting out of PF. So this kind of enabling provision has been introduced. This will really help, smaller entities in India, the GCCs which are coming, which has very few employees, or maybe at one point of time they had reached the threshold, but now the employee headcount is very less. The compliance burden there is much more than the employee benefit which is envisaged. So for those set of employees, this is expected to benefit at a very large stage. Now, very important development in India which has happened is coverage of unorganized sector, and government is very proudly, taking the credit that these labor codes is bringing social security for all. When they say all, organized sector and unorganized sector. So for unorganized sectors, you would have seen the boom of aggregators, Zomato, Swiggy, Ola, Uber. There are a lot of workers, the riders who provide services to you day in, day out basis. Because there was no formal employer-employee relationship there, they were technically out of any coverage from this perspective. So government provided an extensive chapter on some of the concepts called as platform workers, gig workers, aggregators. And by aggregator, it means that organization which provides a marketplace, a digital intermediary which provides a marketplace where sellers and buyers can meet. Sellers and buyers can be of services or goods. So just to take an example, Amazon provides a marketplace where sellers come sell their product and buyers purchase that, right? And then delivery boys comes into picture. They will deliver to your home or offices. So the Amazon in this example will be called as aggregator, and these delivery boys will be called as gig workers. So what law has stated that government will come up with something called as social security fund. And once that social security fund is created, the aggregator will be responsible to contribute 1 to 2% of their turnover to this fund, and which is kind of capped at 5% of the amount which is being paid to these gig workers. So this is one area which will evolve. The Social Security Fund has not yet been notified by the government. It is expected that it will be notified in due course of time. So any of your client, or if you are into this business, right, and you get classified as aggregator, you have to ensure you need to keep track of this development, where once the Social Security Fund comes, you have to register under that fund. You have to register all the gigs and platform workers who are working with you on specified platform or the website which government will release in due course of time. And then there will be some filing requirements, a self-assessment you have to do in terms of what kind of business you have done, uh, and what kind of contributions have to be made. Coming to the next code, our third code, Occupational Safety, Health and Working Conditions Code. This is one of the code where you will see some new sort of entitlements coming into place, some categorization of employees coming into effect. So first and foremost, we'll discuss a concept of employee versus worker. So if you are aware of, there was an act called as Industrial Disputes Act, which is now subsumed under the new labor codes. So Industrial Disputes Act has a concept of workmen, and how the theme of Industrial Disputes Act was, there has to be an industrial dispute, and industrial dispute will arise when there is a workman into picture. So there is a dispute which arises, the person will go to court. In the court will ascertain the facts, what kind of roles and responsibility the person was playing. And once that is ascertained, then court will decide whether the person was workman or not. Once the court decides that yes, you are workman, then the person was entitled for the benefits such as retrenchment, compensation and all under the Industrial Disputes Act. But if the person was considered as non-workman, then technically Industrial Disputes Act was not applicable. So the same definition has been copied from Industrial Disputes Act, and that has been put under the new labor codes. The nomenclature has changed. Workman has become worker, and we'll see how the worker is defined. So anyone in the organization, any employee in the organization who is not having managerial role, administrative role, or supervisory role, they will get classified as worker. And anyone who is having managerial role in the organization or people role under them, so by people role I mean administrative role or supervisory role, then they will technically not get classified as worker. So this ascertainment becomes very, very important, from the fact that you will see a lot of entitlements which will arise because of worker versus employee classification, and a lot of triggers are there in the law. The triggers are like, if you have X number of worker in an organization, you have to form such committee. There is some provision which will get triggered. If you have less than that threshold, the provisions may not be applicable. So every establishment today in advance have to ensure that you are aware of the segregation of worker and non-worker in your organization. Number of workers out of total employee population needs to be known. So that kind of analysis has to be done where as a professionals we can support to some degree. Now some practical insights on that. What is a managerial role? What is the administrative role? And what is a supervisory role? That has not been defined under the neither under Industrial Disputes Act nor under the labor codes. So although they have named it, but what the role consists of is not defined. So in that case, we have to go to various case laws and precedents which are there under the Industrial Disputes Act in relation to workmen. And that is one area where we can explore, we can find answers, and we can help clients in categorizing the various roles under worker and non-worker category. Typically, a summary of some of the case laws is that any role which has a lot of decision making powers in the organization, whether you have people under you or not, but you have some sort of decision making power in the organization, it will be treated as managerial role. But if you have people role under you, so administrative role or supervisory role can get triggered there. So any employee who is managing people, someone is reporting to another employee, then that employee can come out of worker categorization, right? And by don't go by the name. Worker does not mean that it's a manual or unskilled work they will do. So the law very clearly says that even skilled work, technical work, uh, all of that will get covered under worker definition. So technically, one interpretation which comes out is that someone who is an independent contributor in an organization, he may not have people role or managerial role, but very well paid, let's say in an IT company with an independent contributor role, they can technically become a worker under the organization, under the in that organization. So this is one area. If some more clarity from government comes, it will really help. But what I can say, this there is abundant jurisprudence on this matter. Lot of case laws. In fact, all the case laws of ID Act, kind of first ascertains whether the person is a workman or not workman. So a lot of principles arise around that. So I'll tell you some of the case laws also around this. There is a very reputed IT company in India from a Madras High Court. The judgment is the person was a software engineer and the court held him to be a workman under the Industrial Disputes Act. Last month, there was a Delhi High Court judgment. Even a pilot of a airlines was considered as a workman. So sometimes it becomes a very fact-specific exercise. Who is a worker, who is not a worker, and a very granular kind of analysis is required in terms of job descriptions, actual roles and responsibilities being played by the employees, in conjunction with the jurisprudence which is available through past case laws. This exercise can be taken care of. And just by naming someone as manager will not make him manager, or just by naming someone as supervisor will not make him supervisor. Actual role and responsibility has to be seen. So with this background, let's see what are the some of the key provisions under Occupational Safety, Health and Working Conditions Code. First and foremost, this code will be applicable only if an organization has 10 or more workers. So a very small organization with let's say 10 or 15 employees or 20 employees, because everyone will not become worker, they need to very carefully evaluate whether the code is applicable for them or not. But a decent size organization, maybe 100 employee plus organization or 200, 500 employee, 10 is a very small threshold. So having 10 workers in the organization is very easy to achieve. So for you, your kind of organization, the law will definitely get applicable. I'll take one question which has come. So there is a question that seconded employee in India, how to pay gratuity, right? So this a regular question which is being asked is that the inbounds who are coming to India in terms of secondments, whether they will be treated as fixed term employee or not. So as we discussed, fixed term employee, any employee you are issuing a offer letter, they are your regular employees with 12 months or more period. Then if that kind of arrangement is there, yes, inbound with the offer letter from Indian company with a fixed duration of employment can become a fixed term employee, and gratuity can be applicable for them. In the past, we have seen practically also for inbound expats who have worked in India for multiple years, and when 5 years have crossed, some of the companies have paid gratuity to them as per the company policy. So technically, it is also, you have to ensure, you have to see the documents, how it is drafted, what kind of arrangement is there. But if they fall under the guidelines which is given for fixed term employees, gratuity liability or gratuity coverage can arise for these inbounds who come for, let's say, 18 months or 24 months. Since they continue the services for 12 months or more, they can become fixed term employees. Now, coming to some of the provisions which are applicable to workers, right? We have provisions of daily working hours and overtime for them. And before I jump to that, let me be very clear that we have very similar provisions under Shops and Establishment Act. So we have provisions of daily working hours. We have provisions of overtime under the Shops and Establishment Act. But we have seen the enforcement is really not very stringent, because the penal provisions under the shops and establishment was not very stringent. You may have a fine of 500 rupees or 1000 rupees, and that too enforcement was not very strong. But under the labor codes, there is a concept of this graded kind of penal provisions. First time penal provisions are not very harsh. There are monetary fines. Second, non-compliances, may result in harsher provisions where even prosecution related provisions arise. So that is one of the reason this has become a boardroom discussion, that if an employee is working more than daily working hours, then the overtime related provisions should get triggered, and every organization should ensure that if employees are doing overtime, especially the workers who are doing overtime, for them there should be a mechanism around overtime payments to them, and overall mechanism of taking a consent and recording the time so that overtime can be calculated and recorded in the systems. So one area where organizations have to work, and it will have a corresponding financial impact if the overtime policy or principles are not there in your organization. In code on wages, I told I'll come back on daily working hours and overtime related aspect. Even code on wages have similar provisions. They have prescribed daily working hours. They have also prescribed overtime related provisions. But there is a bit of ambiguity there. The language what is there in code on wages is that overtime payment has to be made to employees who are covered under the minimum rate of wages. So I discussed with you that any employee or every employee in the country now, because scheduled employment is getting over or that concept is abolished, everyone is technically covered under minimum wages. So that language is little ambiguous, whether that means everyone is covered under minimum wages or the respective state government will still continue to issue notifications and only those set of employees will be covered under uh, minimum wages, and overtime payment will happen to those non-workers. So out of this discussion, one point is very clear, that any employee who is getting classified as worker in the organization, overtime payment has to be done as per OSH code. And for some other employees, I believe we should wait for some clarity where why government has used that language that overtime payment will be done for employees who are covered under minimum rate of wages. So if that clarity comes, overtime for other set of employees can be decided. But for workers, you definitely need to ensure that overtime related compliances are inbuilt into your compliance system. Another important point, and leave provisions, what we will discuss is applicable only for workers. There is an annual leave encashment 1 day for 20 days of work. Very similar kind of provisions are there under respective Shops and Establishments Act. Then there is a provision of leave carry forward up to 30 days. some of the, for example, Karnataka Shops and Establishment Act, I stated earlier, says up to 45 days. So when we say up to 30 days or up to 45 days, it looks like it's a range from 0 days to 30 days, 0 days to 45 days. So leave can be carried forward only up to 30 days. Any employee, let's say, who gets classified as worker, you have a leave balance of 40 days, right? As on 31st December, you have a leave balance of 40 days. Then there is a provision that only these 30 days will get carried forward. 10 days of encashment has to happen from the employer to those workers. And this provision was due as on 31st December, because for labor year, calendar year has to be considered. So leave balance as on 31st December was supposed to be taken. Any leave beyond 30 days would need encashment for a set of employees who will be called as workers. So this is one area in your organization, in your clients, you should see whether they have taken any action around this aspect. If they have not taken, this is something where further analysis should be done, and if they agree, the leave encashment should be paid to a class of employees. There is another provision which says that leave encashment on demand can also be there. So any employee who gets classified as worker, if you have leave balance of less than 30 or more than 30, if he or she does not want it to carry forward, there is a provision that as on year end, they can come back and demand the leave encashment as well. So that is again one of the area where companies have to incorporate these changes into your HR policies and inbuilt your systems and processes to ensure the leave related provisions are captured appropriately. And definitely it has to be read in conjunction with the state specific shops and establishment acts. There is a concept of inspector come facilitator which has been introduced under new labor codes. So there is a mindset shift which government wants. The inspector Raj to facilitator Raj kind of shift government is expecting. Government wants the government authorities to facilitate the business rather than just doing inspection and finding errors. They will facilitate the business in terms of uh, uh, giving solutions whenever there is a issue, and inspector come facilitator is expected to play a very important role in effective implementation of the new labor codes. Yeah, and we have to wait and watch, because who will become inspector come facilitator, whether the existing labor inspectors which are there from the state governments, they will continue to become, they will be redesignated as inspector come facilitator, or some new, a new degree of personnel will be introduced for these services. We have to just wait and watch for it. Couple of more important aspects under occupational safety, health and working conditions code. You would have seen government press release and a lot of communication coming from government stating that free annual health checkup has to be provided to employees. Now when government says free annual health checkup, couple of things you have to check, because for private sector the appropriate government is state government. So respective state government rules you have to see. For example, for this provision in the state of Tamil Nadu, right? The rules state that workers with age of 45 years or more, they will be getting this facility. Karnataka rule states that kind of white collared guys will not get this facility. People who are there in the factory setup, mines, plantation, they will get this kind of annual health checkup. So this is one area where specified class of employees will be prescribed by the state government based on the presence of the establishment in respective state. You need to check the respective state rules, and then appropriately this kind of benefit can be introduced in the organization. And if organization wants to have this benefit as a beneficial provision for all the employees, nothing better than that. So you can always have a beneficial provision which is over and above the statutory entitlements. Another one, issuance of appointment letter and experience letters with prescribed particulars. So now every state will issue some format of issuing appointment letter. For example, in the state of Karnataka, there are 16 prescribed particulars in the appointment letter format. It is called as Form 10 under the draft state rules of OSH code. So it is expected that the new appointment letters which will be issued should have those prescribed particulars for the employees. So you need to ensure your onboarding processes, policies, the documents what you are collecting should also include these additional information which has to be prescribed in the appointment letters. This is easier part to do. There's a difficult part here. The law also states that for your existing employees, right? If you have not issued an appointment letter in this format, which organizations would not have done, then the law states that within 3 months of codes coming into effect, these appointment letters have to be reissued in the format which government expects to all the existing employees. So that is one area where some administrative work can come for the HR team or the organizations, but something to track again. And when I say 3 months, although law says 3 months from the codes coming into effect, which is already into effect, the state rules, the format comes from state rules. If the state rules are not notified, that is one area where we have to wait and watch when the state rules notified and what is the final format which comes for issuance of appointment letters. Coming to the next point, uh, in terms of core core employment and non-core employment, a very new kind of concept introduced by government. This concept was there in the state of Andhra Pradesh, where in Contract Labor Regulation Act, there was a prohibition of employment of contractual workforce in core business activities. So government has kind of, taken that best practice from the state and introduced at national level. So in current CLRA regime, how it used to work, there is a triad. There are three parties involved. First party is principal employer who avails the services or benefits. Second party is the contractor who is the employer of the contractual workforce, and third party is the contractual workforce. So on behalf of contractor, these workers will go and work at the principal employer's premises, right? So this triad was there, and under this triad, the regulations used to work. Now, government was never checking which was the area where these people were deployed. That was not the ask from Contract Labor Regulation Act. So this is a very new provision which has been introduced, which states that if these people who are coming from third party contractors, right, they are being deployed in core business activities of a business, then that is prohibited. That is the word law has written. It is prohibited to have people in core business activities through third party contractors. So a very significant change which can have some sort of disruption in many business models. We have seen some of the clients where 60-70% of their core business activities being carried through third party employees, right? There are a lot of manpower companies, their core business is only to supply white collared employees to IT companies and to the core businesses. So this has a potential of disrupting this entire business model. So having said that, as a way forward, the organization should very seriously look into this provision, um, as far as possible. If it is possible, have people on your roles for the core business activities. The law has provided some sort of relaxation also. There is a list which has been provided that will always be considered as non-core activities. For example, housekeeping or security will be considered as non-core activity. Similarly, the law has given three exceptions where you can have people in your core activity through third-party contractors. So first one is there is a sudden increase in the demand of work. So sudden demand comes, you have a sudden project, a new project comes, you need people. Then you can have people from in core activities. Another exception which has been provided is that you don't need people for full-time job. So then in for part-time activities, you can have people through third-party contractor. And there is another exception which is little bit broader and prone to different interpretation, is that the activity has been carried out in similar fashion in the past. So that is one area which needs further deliberation and understanding how that will come into picture, because every organization can take a plea that yes, my business model was always like that, and the business has always continued like that. And to me, department can always ask the question, or we need to understand, from department, that whether this provision is at industry level or at organization level, whether the industry runs in a particular fashion where third party employees support the core activities, or it is the individual organization specific requirement which arises. So some ambiguities, but some principles which evolve out of this core versus non-core is that government is trying to discourage people through third-party contractors in your core business activities, and that is something which internally all the organizations should discuss, and your manpower composition should be revalidated in line of new labor codes. The prohibition which is coming should be taken care of in terms of future potential, hirings and deployment of people. Another important, development which has happened, if you have worked in this CLRA domain, central law prescribed a threshold. CLRA Act had prescribed a threshold of 20 uh, contractual employees. Then only CLRA provisions were applicable. Now that threshold has been increased from 20 to 50. And then the respective states in the prior regime, they were supposed to issue their notifications. While some states had a threshold of 20, other state could have made it 50, some state could have made it 100. Now that part has been taken care of and has been taken. The state government do not have now power to prescribe the threshold. That power has been retained by central government. Central government has given a uniform threshold of 50. So in each state, this 50 threshold ideally should work for applicability of this contract labor related provisions. If you have less than 50 contractual employees, then technically the provisions may not be applicable in that kind of setup. Another very important change which has happened in contractual workforce arrangement is that earlier there was a requirement of welfare facilities to be provided by contractor. So there is a list of extensive list of welfare activities which has to be provided to contract workers, such as bathing facilities, toilets, first aid, drinking water, and so on. These kind of basic facilities were mentioned as welfare facilities under CLRA. Similar kind of list has been provided under the new labor codes, OSH code. But now that ownership, which was earlier the responsibility of contractor, has been passed on to principal employer. So this is one of the another responsibility being provided to principal employer. One more point in, one more obligation which comes on principal employer is that payment of statutory bonus. So in the earlier regime, if stat bonus was defaulted by the contractor, then technically there were judgments from Kerala High Court and all that principal employer will not be held liable for that default. But now the law specifically prescribes that principal employer will be responsible for payment of stat bonus also. So if there is a default by the contractor, principal employer has to ensure that kind of payment happens to the contract laborers. So net, when we see, right, we saw some changes in code on wages, in OSH code. Overall, a lot of responsibilities have increased on principal employer who are availing the services of contract workers through contractors in terms of financial and non-financial obligations, as well as government has provided this prohibition in terms of core activities. So all of that has to be factored in all your contracts, all your processes, your hiring plans, and so on. Coming to the next part, the law has given a specific protection to women. Women are now permitted to work in the night shift, but with a consent. So any woman who is working in the night shift, and the central code has prescribed this 7 p.m. The night shift starts from 7 p.m. Respective, uh, state rules, we can see if any deviation exists. But as per central codes, any woman who is working after 7 p.m., it will be considered as night shift. So when they work in the night shift, a consent mechanism should be there. You have to take a consent, and then adequate safety measures have to be provided. These kind of provisions, already exist under Shops and Establishment Act today also. So each state has provided a detailed list of additional safety measures which has to be provided to women employees if they work in the night shift. But some sort of now realignment has to happen because state governments may have different night shift, and the conditions which are prescribed for women working in the night shift should align with the requirements of new labor codes as well. Another important aspect is that we have seen a lot of committees in factory kind of setup. Now, because these laws are agnostic of industry or in the sector, some of the provisions of safety committee, works committee, we will see in the next code grievance redressal committee. These committees have to be formed by all the organizations based on the number of workers they have. So we discussed earlier that you need to ensure how many workers are there in the organization, because a lot of triggers will arise, a lot of provisions will get activated once we are aware of number of workers versus non-workers. So safety committee, the central law provides 500 workers should be there. Karnataka, the limit is 500. In the state of Tamil Nadu, if organization has 250 workers, then the organization has to form a safety committee. I believe Haryana, there is a limit of 150 workers. So state specific rules have to be seen. Once a organization is obliged to form a safety committee, then there are detailed roles and responsibilities which have been provided. There will be representation from employees, workers in this committee, and whatever roles and responsibility they will play will come into picture, and the enabling mechanism has to be provided by the employers. I'll just check if we have any questions. Appointment letters not issued to existing employees, do we have to issue? Definitely we have to issue that. So in fact the rules state that if you have issued the appointment letter, you have to reissue the appointment letter. So if appointment letters are not issued, then you have to issue the first appointment letter to all the employees. And this is one of the area where government had mentioned in the press release also that this is a kind of benefit now every employee will be getting. uh, the appointment letter will be issued to all the employees. So a lot of this publicity, the media related publications which are coming on Twitter and all, they clearly state that for the benefits for youth, benefit for unorganized sector and all, the appointment letters needs to be issued by the employers. Coming to the last code of our discussion today, industrial relations code. First and foremost, let me clarify, although the name states Industrial Relation Code, the code will be applicable equally for all set of organizations, because the way establishment has been defined, it is very, very broad. So accordingly, all the organizations will have these provisions. If you have, let's say, X number of workers and the provision gets triggered, you should ensure these committees and all are being formed. So some of the provisions under IR code is one related to retrenchment provisions. Earlier there was a limit of 100 workers. So organizations were required to take approval from government when up to 100, more than 100 workers were there in the organization for retrenchment. Now that limit has been increased from 100 to 300. And this is one area where some friction was there between the trade unions. The the messaging which was coming out from some groups was that it is very easy to lay off people or retrench people. So government has issued adequate clarification around that. Although the limit has increased from 100 to 300, there are inbuilt controls and mechanisms uh, with regard to retrenchment of people. But the limit has increased from 100 to 300. Similarly, standing order applicability. So standing order, for the benefit of everyone, it is something similar to the appointment letter which is issued. Typically what happens, a lot of organizations, right, the appointment letter was not issued, then standing order always used to help them in cases of dispute, or standing order provided some sort of service conditions to those set of workers. So earlier also it was a matter of dispute whether service sector should take standing order or not. Technically, it was service sector was required to take standing order unless the respective state governments such as Karnataka provided a relaxation around that. But now explicitly government has mentioned that standing order for service sector is very much applicable. Earlier it was implicit, now it is explicit that every service sector where 300 or more workers exist, you have to take a standing order uh, through appropriate government authorities. So this is one of the procedural requirement which will arise for larger organizations where 300 or more workers are there. Now, in cases of retrenchment, there is something called as worker reskilling fund which has been introduced. The fund will come into picture. It has not yet come, but then the employer will be required to contribute 15 days of wages for every completed year of service for every retrenched worker, and this fund will be used for benefit of the retrenched workers. Earlier, there was no such provision. Just the retrenchment compensation was required to be paid. In terms of trade unions, there is an additional requirement which has been introduced. If there are registered trade unions, then the government has introduced provisions of negotiating union and negotiating council. If only one trade union is there, negotiating union recognition will be given. And if there are multiple trade unions, then negotiating council recognition will come into picture. And last but not the least, is the grievance redressal committee. In the current Industrial Disputes Act, right, there is a provision which states that every organization needs to have a grievance redressal mechanism, or you need to have a grievance redressal committee. So GRC, grievance redressal committee, was an optional requirement under the Industrial Disputes Act. Now law has mandated this provision wherein any organization which has 20 or more employees, which is a very small threshold for a very small size of organization, also this threshold can be easily met. These organizations need to have a grievance redressal committee in place. And again, the law has provided the mechanism, the composition, the powers which has to be provided. Some challenges can come here. Organizations may have a grievance redressal committee or a mechanism in place. So that alignment has to happen in due course of time when the organizations actually implement and create this grievance redressal committee to align with the requirements of IR code. So from provisions perspective, I have covered most of it. Now what we will do, we will summarize what we have discussed and some takeaways for you. What kind of services we can provide to clients, and what are the areas where each organization need uh, to look into in terms of implementing the new labor codes. So I have identified 5 business areas where each organization has to work through to ensure that they are getting aligned to the new labor codes. First and foremost is the payroll side of it. So we discussed payroll. There are some timelines which have been introduced. There may be a need of supplementary payroll, full and final settlement. There are timelines which have been given, so that process has to be aligned. If organization has recoveries, loans and advances policies, that is one area where the organizations need to align those policies with the new labor codes. And in terms of payroll, the compensation restructuring is one aspect which organizations may consider, because if your wages are on a very higher side, when we calculate the new wage, as per the new labor codes, then you can look for compensation restructuring to optimize your compensation structure with regard to new wages. Then HR function is very important in terms of the changes what we discussed. New sort of entitlements are coming. The leave policies will change. Employees may get classified as workers. Uh, then if you are present in multiple states, right, then each state there are four rules which will come into place for 4 central codes. So you have to read all the rules. So let's say a organization is present in 5 states, then 20 state rules have to be read, 5 into 420, along with 4 central rules as well as 4 central codes. So a lot of documents have to be factored in into your HR handbook or the policies what exist in the organization. There may be referencing of old laws. Now new laws will come into picture. The formulas, if you have mentioned, for example, gratuity, if you have mentioned in the policies that basic salary will be considered, that will get updated. These kind of changes will be there from HR policy as well as process perspective. Financial impact, we discussed, very significant impact can happen in terms of gratuity. Then other areas could be leave encashment, overtime, and so on. So this is one area where the financial side of it can be taken care by chartered accountants, and they can give guidance on overall other business areas what we discuss. In terms of policies, because new concepts are coming, gig and platform workers, aggregator, if any of the client is in these kind of businesses, then a lot of hand holding they would need during this journey. So how the law will evolve, whenever the changes comes, the new portal comes, there has to be a registration requirement, the calculations of turnover, we can support them in all those activities. Then there are a lot of standards which are prescribed. We discussed some of it. A lot of other aspects could also be there. So any additional safety and health related standards which is prescribed or will be prescribed through state government or the central government, that has to be added to in addition to what currently is being done. And lastly, in terms of manpower composition review, so we kind of touched upon that, the staffing arrangement through third party contracts, right? That is something which really needs to have a relook, because government has clearly stated that it's prohibited to have people in core activities of a business through third party contractors. So you need to ensure and you need to confirm that the existing exceptions will help your existing deployment of people, and what is the position you want to take in for future deployment. And as I stated, worker versus employee assessment is has to be done in all the organizations. In advance you have to do it, because leave encashment or other benefits, then some of the triggers which we discussed, the committee formation, all of that is dependent on number of workers in the organization. So in advance you need to know how many workers are there out of the total employee population. This will, and this is a very dynamic concept, because new set of employee will come, the numbers will change. If you create a new role profile, you have to ensure that categorization. So at JD level, job description level also, the company should work so that they have a very robust documentation around the roles and responsibilities. The correct reflection of roles and responsibility should come in JDs, so that worker versus employee assessment can be on a very uh, correct basis. And in the long run, right, there will be changes to the systems, the ERP processes, all of that also we can support in that migration journey. Now coming to the professional opportunities what exist for chartered accountants and professionals. Uh, each and every organization is getting impacted because of new labor codes, whether it is a small organization, whether it is a large organization. And while some of the things can be taken care by organizations, in general, some sort of hand holding the professionals have to give to their clients or the organizations, so that there is a smooth transition which happens towards the new labor codes. And if you talk about big fours or big tens, right, the top consulting firms, they have their limited bandwidth. They cannot, support everyone with this transition journey. As well as many organizations, they may not be willing to pay very high for this kind of activity. So considering this fact, this is one area which I feel is an excellent professional opportunity for professionals in practice. You have to upskill yourself, have basic understanding of laws. If you have worked already in labor laws in past, then anyways you are a best fit for these kind of advisory services. But otherwise, some sort of upskilling can be done so that you have basic awareness about it. A very simple, solution could be a compensation structuring. We have always done that as tax professionals, as chartered accountants. Just you have to do that compensation restructuring also from the lens of wages. So tax laws will always be there, but from wages, that additional lens has to be introduced. So I believe if and this demand is going to be there for some time, because it's a journey. In one day implementation is not possible. Over the period of 1 year or 2 year, the changes will keep on happening. Some sort of hand holding support will be required. So from professional opportunity perspective, first and foremost, we can do a impact or a gap assessment of organizations. It can be from compensation structuring side, it can be from HR policies side, to ensure that what are the to check what are the gaps, and which are the areas, functions of business which are getting impacted due to new labor codes. Then in the second phase, you can do a recommendations, advisory in terms of compensation restructuring, advisory in terms of what changes should happen in your HR and payroll policies, processes, so that these gets aligned with the requirements of new labor codes. And the third one, implementation and revalidation support. What will happen? The state governments will gradually release their state rules. There will be a lot of notifications, circulars, communications, which will come from time to time, right? As and when it comes. One example we discussed was ESI. There was a communication, then after a week, there it was revoked. It is expected another communication will come. So as and when those communication will come, if the basic awareness is there, we will be in a position to advise our clients on the right action they need to take, right? So revalidation support will continue over a period of time, because it's a graded and phased implementation which government is doing, right? And lastly, in the long run, right, if you're really interested in this area, you can actually support your clients with the one-time filings, migration support. There are a lot of provisions of one-time licensing. Under each code, you take a single license. If you've taken a CLRA registration, there is a migration which will happen, and you can support them in an ongoing basis through various compliances. So a good opportunity to get into this area. If you are already into this area, capitalize that knowledge, and for the overall, it's a win-win situation from your side as a professional, as well as from industry side. Your clients will get real value addition at a time where they really need this support from professionals. And just take, there is another question. So whether the limit of 50 contract workers in core activities from one contractor or aggregate from all contractor. Ideally, it is aggregate of all contractors. Right. So if you have any more questions, happy to take that.
I have added all the questions that
Hmm.
came. You have taken them very nicely. We addressed all the questions very nicely of all the participants.
Perfect. Perfect. So the last, last slide from my side on a lighter note will leave this session. So while I discussed about a lot of things have happened. Government is working day in, day out. The senior most labor ministry officials are in, working very closely with companies. They are coming on, private webinars. The consultants are doing webinars. They're coming. The intent of government is very clear, to have a very smooth implementation. There is a very, very clear mandate from the top that this should not cause inconvenience to the industry at large. A lot of professional bodies are working very closely with labor ministry, and it's very easy to access labor ministry now. You write, you ask any query, they will be ready to answer. They will be ready to come on webinars and all, and that's why a lot of consulting firms have got them on their webinars, and they're very candid discussion they had. And before some of these FAQs came, they kind of provided their perspective, which later on came through FAQs as well, which was got confirmed. So this is not the end. As I stated, professional opportunities arises. It's the time to start the activities. अभी picture अभी बाकी है, because the central rules are not yet notified. The state rules in most of the states are not notified. There are rules and regulations which are about to come. So each and every stage is an opportunity, and it is at a larger scale, right? More than an opportunity, it's something you can actually handhold and support your clients, industry at large, and we can do that. International worker related, we got some of the questions from audience whether gratuity is covered, not covered. Although I gave you answer, some clarity may be awaited, or law will evolve around that. So IW related provisions, the PF Act or the Social Security Act has not mentioned anything about it. It is expected that the EPS, EPF rules, when it comes into picture, then we will have a detailed international worker related provisions from PF perspective. Then the law states that there is a web based inspection scheme which will happen now, like how a lot of things have been digitized under GST and Income Tax Act. A lot of these activities will be digitized, so these schemes will come into picture. There is a composition of offense, which is prescribed. I stated, right, first time it is not considered very serious, second third non compliance is more serious. So there is a composition of offenses which is provided. That scheme has to come into picture. We discussed social security fund has not come, worker reskilling fund has not been notified. So all of these will get notified in due course of time. In terms of what are the portals, what are the final registers, format, compliance timelines, these has not been notified. A lot of compliance burden will now reduce. Government had issued some data that there will be significant reduction in terms of compliances, the registers what we were maintaining under these 29 laws. Then I mentioned, right, inspector come facilitator, who will become, that is not clear. So some of this clarity will come. You would have heard about a Delhi High Court judgment where, with regard to these tribunals for IR code, the matter has reached Delhi High Court, and it was questioned that whether IR code should be there or it should be quashed because some of the procedural mechanism has not been notified. And it was very surprising that within a week's time, government stated that the old mechanism will continue in the new mechanism. So government is doing a great job in this arena. They're working a lot, and we should support, as this group, we should support the country and our clients in this new labor codes journey. With this, I conclude. Thanks a lot, and
Thank you,
thanks for
sir.
being such a supportive audience.
Thank you, sir. As we have taken all the questions of audience, so I would like to directly close the webinar. As we come to end of this webinar, um, I would take an opportunity to extend my sincere gratitude to everyone who made this session a success. I thank you, Ankur Agarwal sir, for being our distinguished speaker and sharing your experience and thought-provoking perspectives of this topic. I also acknowledge the efforts of Committee on Commercial Law, Economic Advisory and NPO Cooperative of ICAI for conducting such an informative webinar. It has been privileged to moderate this session and facilitate the meaningful discussions. Thank you.